Hey everyone, this is James with WSTrades.com. I want to talk about a leading indicator that can predict where stock prices are headed. So a lot of the times we have technical indicators on our chart and they're based on things that have happened in the past, based on price action of the past, so they are lagging indicators. Sometimes we throw these indicators on our chart and we're looking for good long or short entries, but a lot of the times you will see it where maybe the market has a big sell-off and you're looking for that bottom point or you're looking for that reversal. The reversal already happens, price starts to move up, and then you might have an indicator that gives you a long entry signal well after the rally has started, or maybe the rally has been going on for a while, and then one of these lagging indicators will say, hey, it's time to buy. But I want to talk about how you can actually get a jump start on that and how you can look at a leading indicator, and that is PMI, or the Purchasing Managers Index. In the United States, it's one of the most followed economic indicators. It is the Institute of Supply Management's Purchasing Managers Index, or PMI. The ISM's PMI is a survey sent to businesses, and it contains information about production levels, new orders, inventories, deliveries, backlog, and employment. So a lot of key data there is collected in this report. The information collected can be used to forecast the overall business confidence within the economy and helps to determine if it shows expansion in the economy or contraction. One of the reasons why PMI is one of the most followed economic indicators is because of its strong correlation with GDP, while being one of the first economic indicators to be released monthly. The component GDP that the PMI most closely relates to is the investment component. All right, so let's take a look here at a chart that actually shows the correlation between PMI and annual real GDP growth. This chart actually spans from 1998 all the way up to 2020. And I will point out a few important points on this chart. So you can see up here, we're having some pretty good annual GDP growth here back in 2000 through 2002, I guess. But you can see here this dotted line is the PMI. And what you can see here is we have annual GDP growth. I guess this is around the mid 2000 year, up around 5% or so. It has a pretty good dip, but then it rallies back pretty hard, and we're getting up above 5% here. Looks like maybe mid 2001, but look at what happened to PMI. Dropped off significantly. It's almost down here. It was up around 60 or above 60, and then it made this sharp decline. But look at the annual GDP growth. It hasn't had that sharp decline yet. So this is why it is leading. So this thing tanks. We still have pretty good annual GDP growth here in 2001, and then bam, fat dump here in GDP growth. It's up around 4%, above 4%, but the PMI has already tanked below 50. And then huge sharp fall off here. So that's why you can kind of see that it is a leading indicator. It's not looking at what is going on with GDP growth in the past. It's a leading indicator of what's happening to GDP. And then when we have something happen with GDP growth and that starts to tank, that reflects in investments and stock prices. So you can definitely see there that this thing just makes these moves a little quicker. Here's another good example here. You have a little bit of a peak here on the PMI. It peaks out around 60, and this is in 2006. And you have a little bit of a peak here on the annual GDP growth. It's almost up around 4%. And then you see the PMI starts to tank here. So we have this little peak. It starts to move lower, but look what's happening with the annual GDP growth. It comes up here and sets a new high of about 4% at this point right here, but the PMI has already started to decline. So again, that's your leading indicator. PMI declining, but GDP growth still going up. Look out below. You see this huge collapse here near 2008. So I just wanted to show a chart and actually give you an idea of how the PMI tanking can kind of give you a heads up on GDP tanking and having a collapse. We can definitely see those happening around the year 2000, 2001, and then we have another prediction here of GDP tanking around 2008, 2009. That's where we had the real estate crash and the real estate market collapse. So if you thought any of the information in this video was useful, please like this video. Please also subscribe to the channel if you're not subscribed. Hit that notification bell. Appreciate you for taking the time to watch this. Talk to you soon.